The AlphaDelta Canadian Growth of Dividend Income Class Fund, I think, is a fantastic opportunity. It is a fund where we are going to be investing in equities across Canada as well as the United States. Currently, the portfolio is invested about 25% in the United States, and then the remainder is in Canada. Some of the areas that we do really like in Canada include the infrastructure segment. And we take a fairly broad view of what infrastructure can mean, and that in energy, the infrastructure segment would be the pipelines, energy storage. Names like Brookfield Infrastructure play a key role in the portfolio, where we have long seen that business able to make acquisitions in a counter-cyclical manner, in that they buy cheap and they sell expensive. And so that benefits us as unit holders. In the United States, we like some of the names like the defense contractors, where there is a fairly visible moat around some of those businesses because there's very limited competition. They have very long contracts. They have been able to generate rising cash flows as well as maintain reasonable balance sheets and then pay rising dividends to shareholders. I think the fund is really well positioned. Iris, as a relatively small emerging manager, I think we are able to capture opportunities that maybe larger money managers may not be able to. And we say that because of some of the scale restrictions that larger money managers may encounter, in that as a smaller money manager, we can buy small and mid-cap securities that may not be as well followed or as well known by the broad investor public. And as a result, there may actually be more total return potential from those securities. I also believe that the fund is really well positioned from being a core dividend-oriented portfolio, and we do really believe that that is an asset class that makes very good sense for a lot of investors to have exposure to. There's always going to be an interest in sector-specific securities and sector-specific areas, whether it be technology or gold or junior oil, and those are a lot of fun and can maybe make up a smaller portion of a client's portfolio. However, for the bulk of a client's assets, we think that a portfolio like this one, with geographic diversification, invested in businesses with solid earnings and that are rewarding shareholders with dividends, does make sense for the majority of that portfolio.